Alright, I want to welcome you to part 5 of my training video series. This is the training video on how to read day trading lines like support lines, resistance lines when you're day trading. And it also goes a long way for when you're also not only just day trading, but when you're swing trading and just trying to chart a stock. So today we actually had another sell-off. We actually opened up down today. If you remember from my previous video number 4, I said I wouldn't have to chart further down, only because I was expecting the market to bounce after being down about $7 in the last 2 days. So today, but I did actually say that the next support would probably be the 100-day, and it pretty much gave us some support. It actually slipped below the 100-day, but actually came out strong above the 100-day. So that was actually pretty good for the market. Monday is going to be pretty interesting to see what happens. Again, I was expecting to bounce back, but we actually did in a way bounce back after finding a bottom. So let's go into the charts for today, and then what we're going to do is, going off of our trend that we've been going through for this whole series, is I'm not going to chart this chart here on this day. I'm not going to chart it for Friday. I'm actually going to chart it. I'm gonna start on I'm gonna start from the previous days before today. So that's what we want to do, because we want to see how it matches up with the trading for today. So that's what we're going to do. But I want to show you this real quick so you get an idea on how the trading actually went today. And we actually started off positive, which is actually pretty good. So we started off positive, and then we hung below, got above, hung below, but it was pretty much like a ladder going down. This was actually screaming lower pricing all the way down until we found the bottom here right around 11:30. I actually jumped in, got something. Wasn't as much as I thought it would be, but you know, I actually got something. So want to go ahead and go back so we can actually look at how the day trading lines will actually match up for today. So let's go ahead and do that now. Let me take away this trading day. I'm going to expand this. Probably going to have to get to a 15-minute chart or longer. Oh wow, this is going to get a little hard to chart. If I go by the hourlies, there's not that many dips and support levels that I can actually reach. You know, I got an hour time frame here, so let's see what we can make out of this. So we're actually charting the stock from, we can use these two tops. Look at this top here. Actually more than two tops. It's 1, 2, 3, 4. We'll use these two levels to chart how the action went today. Again, the further you go out, the less, I'm not going to say the less accurate it is, but you will not be able to get into those smaller lines that you would actually want. You actually need the minute chart to actually show you a lot of pricing action. The minute chart actually shows you a lot. A lot of people like to use the 30-minute chart to trade, an hour chart to trade, 10-minute chart to trade. Most of the times when I'm day trading, I will use the minute chart. If I don't use the minute chart and I want to see volume come in on a certain at a certain time frame, I will use maybe the 5-minute chart, but I will not use my lines on a 5-minute chart. I will not use my lines on a 10-minute chart when I'm day trading. This is only when I'm day trading. Now, when I'm trying to find different points like I'm doing now, of course I'm using the 1-hour chart, only because I need to go back further in time to find the stock at that pricing level so I can, have it for my future reference. So, okay, now with that said, let's go ahead and chart this. Alright, already I see this level here. Looks good. I like that. I like that bottom here. And I like this. I actually like this here in this area. But that's at the 158 level, I think. Yeah, actually, yeah, this would work. The 158 level, yeah, that would work. Okay, so I'm just trying to, just put the lines into as close as the trading range was today. So in other words, like, I don't want to chart all the way down here because I know the stock didn't even come down here at all today at at 153. It didn't make it that far. All right, so as I'm going back up in here, let's see what other lines I can use. I'm gonna make this a little tighter. It's really not much I can actually do with this one. I could probably use this line here on the hourly. We like this, we like that. What I'm gonna do is I'm going to color these actually yellow. Only reason why I'm doing that is just so we'll know it from when we go to our day chart, what lines we're actually looking at. So let's see if I can chart something in between this red line in here. I don't really like that level. Let's take it because, I mean, again, we are at the hourly chart, so it may help us. I'm gonna leave that one white because I really don't like that line. But something tells me that if I leave it in there and when we go back to the today's chart, it's going to magically appear to work somehow. But we'll see. We'll see. All right, can I get another line up in here? Let's take a couple more lines. We'll definitely take that level. This is why it's hard to do the hourly chart, because I'm using a couple of days here and it's an hourly chart. It really doesn't break down the pricing levels to how I've showed you how to do it in the second part of this training video. But I mean, we'll see how this works. So that's why it's good. Like when the stock hits a certain level, if you do not have any lines in that level, chart them and just leave them. Chart them and leave them. Now, most of the times, if you're using this platform, sometimes the lines will disappear over time. I mean, of course, you would have to expand the chart a little bit more in order to see those lines, but you can always redraw those lines. If you like those lines, just redraw them back in your minute chart. You can always, like for instance, I can post here, hit this, take that, and then type in where that line was that I actually deleted, that I couldn't see anymore. So you can actually do that, and that's with this freestockcharts.com that I'm using. So where are we going to use this? We can use it there. I like that. I like that. I like this. I like this touch here. I like this touch. I like this touch. I like that the stock opened right there. See that little line there? Also, I like these 3 touches here. I like that. So we got 1, 2, 3, 4. We got 5 lines in there. And they look pretty good to me. I really don't see anything in this level. Then again, maybe I do. Now I just want to see the pricing in between those levels. So we got 157.45, 156.87. Okay, that's about a 50-cent difference. You really don't see large moves in SPY on a normal day. Now volatility day, of course, you'll see some dollar swings, $2 swings here and there. You'll see it up $2, then down $2, which will be a $4 swing. But you'll see those types of moves during volatility time. But normally, on a normal scale, SPY does not move theoretically that much. That's why I like the stock, because it has its times when it moves big and it has its times where it moves small, and you can make money off of both moves, especially in the options. Now that they actually put the 50 cents into some of the options. So for instance, you have 150.50, instead of 150 and then 152. Now you have the 50 cents that actually helps you out too. And that just goes to show you that sometimes SPY does not move that much, and it's actually one of the more popular trading stocks or trading options in the industry. SPY is one of the top. You see a lot of volume in SPY, and of course I love volume because it's easy to get your asking price and your bid price. So it's easy to sell and it's easy to buy. You don't get stuck with not having someone to buy your call if the stock, of course, is at that level that you're trying to bid or sell at. No problems at all. Okay, so now that we got that straightened out, let's go to today. Let's see how these lines add up. See, we can't see the lines right now, and this is what I mean. Sometimes in an hourly chart and in a daily chart, if you're trying to look at it on a minute chart, sometimes the lines will not show. So you have to go back and expand the chart in order to see. Hopefully those lines will pop up. You see them popping up. Alright, so these are my lines. Actually, this is the line that I said I didn't want to actually put in, but it actually worked today. These 2 yellow lines, of course, are the lines that I actually put in on the other one. This white line, of course, we know where that white line came from because we actually put that one in as well. This was at the 157.43 level, so Actually, our lines are actually lining up pretty well. I think I got some more lines under there. That was the other 3 that I've done. But of course the stock didn't fall that far. But in case it does, we have those lines there. Okay, now just to review where we are. This is today. This chart here, from here to here, that's today. We already had the red line in there. We said that the stock actually closed right below it, and of course we know that because of this small yellow line represents where the stock closed the previous day on my chart. That's how I set it up. So opened here, it opened here right in this area, hit the red line, which was our no-go line. We colored that color because of the pricing action on that level. Had trouble getting over it. Hit our white line that we made on the previous year. Actually, we made this white line on the previous year, and look at how it's playing a role in this one. It actually plays a role in yesterday's trading action as finding resistance, getting below and then breaking right back above. And then on today's action, finding support, getting back over, support, getting back over, and again, see these red lines right in there? It broke and fell. Our yellow line here added some stability, or some type of a level. Not much of a pricing action in that level, but I like it. Look at this here. There's actually a line hitting that level there. Line. Look at that. Hitting it perfectly here. Hitting it perfectly here. Finding a uptrend. Hitting this before going higher, breaking above this line, could not stay positive. Could not stay positive and fell right below this white line. Actually trying to get back above before ending right in between the white and the yellow line. Our other yellow line, this one, played some role, but not as much as this one. So this line, at this point, we could delete it, or we can leave it in there as a as another level of interest. It's pretty much up to you. You already have your yellow line here, you have your white line here, and you actually have this white line here. This white line is actually really good. You may want to since we just drew these lines on the previous year and comparing them to today, you can actually color this, because that was a huge bounce, especially with yesterday's sell-off, today's sell-off, Wednesday's sell-off, today's bounce off this line, huge. That will be another purple line. This would actually be a white line. This would be a brown line. Now remember, you can color these charts however you please. You don't have to use my coloring system. My coloring system works for me. It may not work for anybody else. And normally I don't color lines this close, but I mean, over the last couple of days, these lines have been red hot. I mean, you see it for yourself. They've been red hot, especially this line. I mean, we just did this line, and look at it, had matched up perfectly. I didn't know the stock hit this level. We saw a glimpse, but I couldn't remember. So I couldn't remember. That's why I did these bottom lines because I couldn't remember. So just to show you that this stuff is not planned. The stock market actually runs on what I call a map. The stock market runs on a map. It has its own map. It's up to you as a trader to find the map so you can actually follow it down the same path and actually predict where it's going to hit, what point will break, what point will give you the leverage, and what point will give you your out, your entry and your out. That is what you're mapping out, and doing these lines will map that out for you perfectly. Look at this. Now some lines that you may draw may not have an impact on that trading day, but again, remember, every line that you draw will have some type of significance, either today, tomorrow, next week, a month from now, or whenever. Build your guidelines. Your guidelines will help you. I've showed you in all of these training videos on how they've helped. I could continue to do more of these just so you can understand how they still continue to work. Why they continue to work is, again, the system to me is not run by individual traders. To me, it's not, because there's a lot of coincidences that I see that I don't understand it. I don't understand it because it's a coincidence that happens when you map out some of these stocks. In other words, what I'm trying to say is, I wish I could bring up mine. Let me see if I can bring this up. Let me sign out of here real quick. Uh-oh. Sorry about that. Let me... I have too many emails. Oh, come on. Oh. I got it. Okay, so what I mean by some things are coincidence. When you map out a stock, it really gives you a better picture of how things are. This is my stock. This is my chart, of course. I've charted these lines a really long time ago. These lines, of course, are very close because I've gone on top of lines, on top of lines, on top of lines. But what I want to show you real quick is Zynga. Now I will actually break down Zynga chart in my swing trade videos. I actually finished with part 1 yesterday. I'm going to be working on part 2, and I'm not sure how many parts in that series there will be, but that series will probably continue because swing trades come about every day. There's always something new, there's always something different. Stocks do change. I mean, they don't go in the same direction. Stocks do change every day. But what I want to show you about coincidences is, I mean, this is not the only stock that actually does this, but look at this. Zynga was looking pretty bad. It actually hit the 200-day average, tried to stay above, it actually did, but getting hung up on the downtrend line that I've made back earlier this year. Got hung up on the downtrend line and actually hit it perfectly again after trying to get back above the downtrend line. Getting back below the 200-day, and then the support or resistance level, more support than resistance, because it's only ducked below it twice and stayed above. Actually, your 200-day would be more of a resistance than this level here is. I just did it as support because I found it as being support, as you see here, where this line here actually hit this line, and then the next day you see this you see the cross here opened and closed on this line after dipping below and trying to dip higher. But what I want to tell you is the stock actually seems pretty stable in this area here. Notice this wedge. This yellow line brings a wedge right to the 200-day moving average, and actually right by the support level that I actually created a while ago too. And just to give you eyes on how when I charted that line, let's see, this price was at 284. So 284. We're looking for 284. There's a lot of lines in here. Hopefully it won't take that long to get to 284. Alright, 284 is coming up, I hope. $284. Come on, 284. Let's try to hurry it up. 284. Almost feel like I'm never going to find this number. Oh, there we go. 284. I created this line in February 19th, 2013. 284. And I placed it on the date of 11/27/12. This pretty much doesn't mean anything, because sometimes I could place it here on the side and it actually meant for another day. But this is actually when I created that line. I created that line February 19th, 2013, almost 4 or 5 months ago, almost. And I mean, the reason why I'm showing you that is just so you know that I just didn't put this line here. This line has been here since February, and all of a sudden, well, the reason why I'm telling you this is because I was talking about coincidences, and this downtrend line actually meets with this support line that I actually created. Was getting wedged in between this wedge. See this? The previous day from yesterday's sell-off, it actually hit the downtrend line and actually stayed above the support line. I was thinking that this was going to push the stock up higher, But of course, this is a downtrend wedge, which could also indicate a bearish move. But I was on a more positive side of Zynga, and I wanted it to go higher, just because of the RSI. RSI is pretty much almost oversold, and also MACD. I was hoping that the MACD would cross, and it actually missed the cross right here. It was going to cross there to go higher, to take this stock up much higher. That didn't happen because today, this line here, the stock was all of a sudden downgraded. Coincidence? I mean, they could have downgraded it, somewhere else in this, and they could have downgraded it here. They could have downgraded it here. Happened to get downgraded right as the wedge was going to take this stock in either direction. Something came out and they downgraded the stock. So the stock broke the wedge, but actually still stayed in between my two support levels here. So again, it's just, there's a lot of coincidences in the stock market. So to me, I don't think that it's ran by individual traders, and of course that's another video. But just my opinion. It's just too many coincidences. I can go on and go on and on. But the only thing I want to arm you with is the tools to be able to make your own decisions. And that's what I'm trying to do here with giving you support lines, resistance lines, different buying levels, different exit levels, and I'm hoping that you're getting that from these videos. So I'm going to end this video here. This is probably one of my longest videos. It's 32 minutes long right now. But I just wanted to show you this real quick. I'll go into more details on swing trading, stocks like these, in my swing trading videos, and I'll be doing part 2 probably sometime this weekend. But thank you for watching. Hope you're enjoying the videos. Again, leave your comments. If you have any questions, just let me know. I'll be gladly to answer them. And thank you again for your patience. Again, I've never done any video series before, so this is my first time. Well, not my first video, but of course it's my first time doing a set of videos. So I'm learning every day on trying to do these videos, and I'm glad you're being patient with me, and thank you very much.